Good afternoon, everyone. If you can hear my voice, please feel free to type 1 for me so I can know that there is no issue on sound system. Thank you. Okay, it seems like everyone can hear my voice. So first of all, thank you all for being here with us today for our 2025 budget talks presented by Adrian Yeo, KL branch. So my name is Pei Hong, the MC for today. We are excited to welcome each of you as we will dive into the insight and opportunities on this new budget announced by the Prime Minister comes Finance Minister Anwar last month. So today's sharing will be led by Adrian and Cindy. Adrian is our co-founder of Adrian Yeo, and Cindy is our tax director for KL branch. So both of them have more than 30 years of experience in this field. And Cindy is a HRDF certified trainer. So if you all have any question by today, so please feel free to type in the chat box. Our team will try our best to answer all questions. All right. So before we begin, let me share a little bit of our firm. Okay, let me share a little bit of our firm. I believe most of the people knowing that Adrian Yeo is located in the HQ is located at the PJ Kelana Jaya. But today we are one of the branches of Adrian Yeo, which we currently located right here in Bukit Jalil. So we're offering a comprehensive range of business like audit, tax, finance management, and some in-house training, etc. So today we have prepared an in-depth analysis for Malaysia 2025 budgets, which we will give you an idea on economy outlook, personal tax, corporate tax, real property gain tax, and so on. So we hope that you find this section is valuable and can give you a fresh perspective to your business and business planning for the year ahead. So now let us invite Adrian to start with the budget sharing on economy outlook.
Thank you. Hello, very good afternoon. I'm Adrian Yeo. I'm the founder for Adrian Yeo 29 years ago. So today, I'll spend about half an hour to share with you my thoughts on the big picture about the budget and the outlook. One moment. One moment. Okay. Sir? Okay. Moment. Just okay. Let's look at the big picture. This is the federal government budget released out 2021 to 2025. You see, the one that we're looking at is 2025. So the income is about 340 billion. Expenditure is 335 billion. These are the English session. English. Okay. Then the operating expenditure, all these years, which I've been tracking over the last 28 years, the operating income and the operating expenditure is always the same, about the same. Operating income slightly more than operating expenditure over the past 28 years that I've been tracking. And development expenditure, 85 billion. This one is always funded by borrowings. So that gave rise to a deficit of about 80 billion. But at the bottom in red, you can see that the deficit, yearly deficit has been reducing. So that means the government is taking a concerted effort to reduce the deficit, but never get it positive for 27 consecutive years. Now we look at where the 340 billion coming from. Okay, the 340 billion, 31% come from company tax, then personal tax about 13%, sales tax and service tax constitute 10%. So these are some of the main category of revenue that we are having. Okay, now we touch a bit on the trade. The global trade, US and China trade war since 2018. This trade war between China and US, whereby US impose higher import duties for goods from China. The impact is Malaysia is the biggest winner because quite many of the Chinese manufacturers or the exporter have relocated some of the businesses to Malaysia, either setting up factory in Malaysia or they do some repackaging, retagging of the products. especially in the field of electronics, circuits, natural gas, and communication apparatus. This trade, few days ago, U.S. election, Donald Trump has won. So apparently, his policy is he want to make America great again. So in that case, they want to shift some of the manufacturing base to US, and they're going to impose more import duties, especially from China. So we're waiting to see what's the impact of there's a change in policy. Possibly Malaysia will benefit from it. Here we list down some statistics by states where we export. Which state have the bigger export? How to get rid of this? Penang is our biggest exporter with 35 billion, followed by Johor, Selangor, Sarawak, and KL. Surprisingly, it's not Selangor, but Johor is picking up. Not moving. Okay. Here, the breakdown. This chart shows the breakdown of our export of 1.1 trillion. That's a lot for the past 9 months. So the biggest sector of our export manufactured products are electrical and electronics, followed by petroleum, then palm oil, chemical, and scientific equipment. These are the 5 major export. Lately, there are a lot of publicity on data center. So Malaysia have 12 data center approved by MITI. Some already started, some in progress. So the two chart will show, the first chart, the pie chart show Singapore is the biggest data center, constitute about 60% of ASEAN data center services capacity. Then come the second chart, 2028 forecast, Malaysia going to take about 45%, going to be the biggest, going to surpass Singapore. So this one, positive news. Okay. Now I'd like to, since we are a tax specialist, so I'd like to touch on tax system in Malaysia. Have some to put it in perspective. We compare. We use UK, the developed world. We are the developing world. We put developed world like UK as a benchmark for comparison. We listed down 6 area of taxes. The first, income tax. Malaysia, our tax on local income money, ranging from 1 to 30%, whereby the developed world like UK, Australia, America, even China, the income tax is on worldwide income. So what do you mean by worldwide income? Worldwide income, let's say if there's a Australian who are seconded to Malaysia under work permit, for example, or PR, so they have to submit income tax in Malaysia. But at the year end in tax year in Australia, they have to submit to Australia the total income. So i.e. the income earned in Australia plus overseas income like Malaysia income, if the income, rental income from Europe, Singapore, so they have to report all back to the mother country. So that one is called worldwide income, whereby normally the tax rate is higher. Like in UK have a three tax band, 20%, 40 and 45. So the worldwide income, how they compute is if the total tax rate in Australia, let's say is 47%, but Malaysia pay income tax of 30%. So in Australia, these Australian have to pay the differential 17% to the Australian government. This is what we call worldwide income tax. So this income tax, be mindful that if you are a high net worth individual, it's advantageous to choose a country with an income tax system that only pay local tax, worldwide income not included. So here, before you change the color of your passport, be mindful. So Malaysia have the advantage. The next one, corporation tax. Malaysia corporation tax for the SME that with a pair up of below 2 million, then the tax rate for the first 100,000 is 15%. Then the next 500,000, 17%. Anything in excess of 600,000 shall be taxed at 24%. But in the developed world, normally it's higher. It's 20, normally hover about 25 to up to 40%. And capital gains tax. What is capital gains? Capital gains is you invest in long-term asset. What are the long-term assets? Let's say taking the UK as a definition for capital gains tax, include properties, land and building, shares, listed or unlisted, arts, a collection of arts, antique, precious metal like gold, ruby, diamond, silver, all this. So for them, they are comprehensive. They include almost all sort of capital investment. Then their tax rate is 10 to 24%. Whereby Malaysia, ours is we only take our capital gains tax only partial of the capital gains. So we only confined to real property gains tax, mainly 0 to 30%. For Sdn Bhd is 10 to 30%. Individual, after 5 years is 0%. So this tax is very little. And there's another area of capital gains on unlisted shares. Unlisted shares is only for corporate disposal, i.e., only if your company, that means is a holding subsidiary structure. Holding company dispose of subsidiary shares, then the tax shall be imposed for share that started in you receive the share allotted to you in the year 2024 will be taxed on 10% of the gain. But if the share is on before 2023, then the tax is lower. You take 2% on the gross disposal price. So here, so this tax is very little unlisted shares because I would put it 99% of the shares shareholder of Sdn Bhd are owned by individual, or maybe less than 1% owned by a holding structure. So that means the tax is going to be very insignificant. I'm sure it's less than 0.1%. So 2% of the disposal price or 10% again going to have very little impact on the high net worth individual. The next one, I'm going to estate duty, inheritance tax. before budget, there were rumor going around saying that inheritance tax could be introduced. So here, just want to highlight that we had inheritance tax, and that was in the 80s. It was abolished in 1991, and the tax rate was 0.5% and 10%. So the exempted value is 2 million. Then 2 to 3 million, you're looking at 0.5%. Anything above 4 million is at 10%. So our inheritance tax structure previously was on the law. But in the developed world, the tax rate by and large is around 40%, like UK 40. For SST and VAT, there are also rumors that VAT could come back in the last budget, but it didn't turn out. So our sales tax is 10%, service tax 8%, with exception of some services at 6%. Whereby in the developed world, 20% is the tax rate for VAT. Then the last one is dividend tax. Dividend, we are taxed at CAM 2025, and any yearly dividend to individual, you receive dividend below 100,000 in a year, in our tax year, is exempted. Anything above 100,000 will be taxed around 2%. And the dividend for tax in UK is 9%, 34%, and 39%. So our 2% here is not significant. Nevertheless, Malaysian, when this tax proposal came out 3 weeks ago, then people take it as double taxation. It's 2%. In China, it's 20%. So here, I'd like to add on about these dividends. For company that have high retained profits, you have a few ways of dealing with this retained profit. Many of the businessmen try to empty the retained profits as much as they can by the end of this year, so that anything declared before by end of this year has no tax. But before you declare empty this, you have to have there's certain things that you need to consider. First is companies that borrow money from banks. Some banks have put some covenant in the term sheets when we pick up the loans, that when we declare dividends, some will need consent from the bankers before declare. That one, the first thing. Then the second thing is when you empty your retained profits, when the company go for financing or ask for more bank facilities, your grading will come down because you are not as strong as you used to be. Then the third consideration is we can use dividend as a form of tax planning. How we do tax planning? Let's say for currently in the Borang BE or Borang B, the form that we fill in, there's no more column for dividend income. So because company pay tax, then it's considered final tax. So when the shareholder receive the income, so it's not taxable anymore. So in the income tax form, they just delete this item. they deleted this item. So in our J form, even though we receive dividend, this this J form didn't reflect dividend as our yearly income. So come 2025, then this dividend column will appear in the borang B and borang BE, assuming that our salary income is 300,000, then dividend 200,000. So then the borang J will show our income in 2005 as 500,000, whereby in 2024 is only salary income of 300. Dividend income doesn't appear. So if you need to have higher income in the J form to look better, so you can consider don't declare all your retained profits now. So you can space your dividend planning moving forward. So what I do over the past few years is I pay myself dividend every month. So every month, so the bank have to take it as it could be my regular income because I really receive dividend income every month. So moving forward, you can consider pay yourself dividends. Let's say you have 5 million return profits. With the view that maybe some of you are not most of us are not aggressive. Some of the profit might be declining. So we're going to have lesser, those who are going to have lesser profits. So you can consider keeping retained profits, most of it, as to declare, to pass it out over the next 5 to 10 years, to pass it out so that you can get return dividend of 100,000, 150,000 or below 100. So you pass it, so your J form will look better. You can consider that. Okay, here I would like to touch a bit more on SST. SST, I'm sure we come back. So it's a matter of when. So like us, our SST, the income is only 10% of the country revenue, whereby Singapore is 17, Vietnam 24, Thailand 24, Indonesia 29, Asia Pacific 26. I think when we introduce this GST at 8%, my guesstimate is we'll get about 18%, 18 to 19%. So when the government always show the money, we got fall back on GST, because GST is a complete system, where SST is a bit messy. But the government is always worried about, government in power always worry about introduction of GST, because there's a high risk of them losing power, political power. Here I would like to illustrate, talk a bit more on inheritance tax, something that most of the high net worth individuals are concerned with. Indonesia, they have, in the ASEAN country, there are few have inheritance tax. Indonesia 5%, Thailand 10%, Philippines 5 to 20%. Malaysia used to be 10%. Singapore none, Hong Kong none. So for all the why Hong Kong and Malaysia and Singapore are the world top 3 or top 4 financial center is because of the tax system. Because inheritance tax really scare the rich. So those countries aspire to be world financial centers. They always try to not to implement inheritance tax. Why there are so many rich men settled down in Singapore? Uh, the main reason is Singapore no inheritance tax, Hong Kong no inheritance tax. A lot of money has shifted to Singapore from Hong Kong because Singapore and Hong Kong politically not stable. Singapore is more steady. So the inheritance tax, I hope Malaysia have to think hard because the collection wouldn't be a lot for inheritance tax. So the rich have to be careful. So I maybe have one illustration on inheritance tax. Inheritance tax, let's say in UK, a parent pass away, leave a property only £1 million. So the exemption not taxable is 325,000. So left with 675,000 taxable at 40%. So that means the children that inherits this property, this house of 1 million, have to pay 270,000 pounds before the property can be transferred to their names. So what is the outcome? The chance that the children would have 270,000 pounds. So I mean the children have to sell the house, pay the property gain tax, now the inheritance tax, and inherit the cash of 630,000. So this inheritance tax is very worried. So Malaysia, hopefully, this won't come too soon, but I'm sure this inheritance tax will come because this inheritance tax is a Robin Hood tax. Each year will come. Meanwhile, we are okay. So that's why hardly anybody look at trust or those things. So we just leave a will, give to the children. Anything happen to us, one document, the stamping fee only 10 ringgit. Disregard the value of that property. So I think this inheritance tax is something that we need to think about. Maybe 5 years later. But meanwhile, we just keep this inheritance tax in view that when the time comes, we are prepared. So here I come to the conclusion of my presentation. In Malaysia, where law sales tax of 10%, service tax of 8%, whereby GST in the developed world is above 10%, 10 to 20%. And Malaysia is income tax is taxed on local income, only income earned in Malaysia, not taxable. Like some of the Malaysian could be working in tax-free country like Dubai. I have some clients who work in Dubai. Let's say they earn 1 million ringgit a year. Dubai no need to pay tax, but Malaysia they only have rental income. So the income tax in Malaysia, let's say the rental income is 30,000. So actually the tax is zero. But if they are tax if they are tax resident in Malaysia, if they are non-tax resident in Malaysia, they pay 30,000. They pay tax rate of 30% on 100,000 is 3,000 only. Whereby the Dubai tax, the Dubai income is not need to report in Malaysia. So that's the advantage of having income tax on local income only, not worldwide income. Then the next one, capital gain tax. The country receives very little income on capital gain tax because most of us, we bought property in our personal name. And I would think more than 90% of most of our disposal is more than 5 years. So the capital gains is zero. A company that pay after 5 years only 10%. That one, the amount is not significant, might be less than 10% of all the total purchases. And Malaysia don't have inheritance tax. So I mean, we don't need to worry. So that means if we leave behind 1 million pieces of Musang King, so that 100 Musang King no need to donate 40% to the government or 10% to the government. We still can give away 1 million pieces of Musang King to the kids. But if the inheritance tax were to set in, let's say 40% eventually, then our thinking will be different. Will be the high net worth individual, we consume most of the wealth before we go. So i.e., those who are very rich, we buy football club in UK so that your face can appear in TV every week, Premier League. You buy you just enjoy life. So that we change the whole thinking. So in conclusion, Malaysia is a semi-tax haven. So semi-tax haven, don't simply change your passport. Keep the Malaysian passport because our passport rank about number 11 in the world. We can go anywhere in the world. So as long as you have your credit card, your cash point, others, so you can you still can enjoy your wealth anywhere in the world without changing your passport. With that, I conclude today's presentation. Those people who have any question can type the chat box. Those people who want to talk to me, you can call me at 012 399 0733. Thank you very much. Now before I pass on to the next presenter, Cindy. You want to present next? Okay. Cindy worked for us for 20 years. She had about 25 years of experience in Malaysian tax. She was my tax director. So now we start Adrian KL Tax Branch. She's heading it. She's going to share with you the more details about taxes, some grant and incentive. Over to you, Cindy. Thank you.
Hello. Hello. Yes, we test the mic. Is the sound okay? Yes. If you're okay, can you give me 888? Yes. Come, let me know whether the sound is fine or not. Yeah, very good. Hi, Miss Ho, Anna. Hi, Fui, Miss Wong. Wow, many old faces. So, who has attended my talk? Can you let me know by pressing 111? And who haven't attended my talk, so please press 000. I just want to do a very quick survey. Yes. Have you attended my talk? Yes. Oh, Tony also you joined. Morning, we see you. Yes, 111. Yes. If you attended my talk, please press 111. If you didn't, then you press 000. Yes. How about the rest? Oh, Miss Hall, 111. Leo, hi, Miss Leo. Miss Leo also 111. Oh, Bharati, hi. Okay. Hannah, very good. Yeah, thank you. Thank you for your response. So a very quick one. So the first thing I will cover for about the foreign source income. This is only the highlights for the individual tax. Actually, for the budget 2025, Carol didn't. Hi, Carol. Yes, didn't attend my talk. Yeah. Okay. So there do not have many highlights. Budgets related to the individual tax for budget 2025. Okay, but now we will summarize of the highlights for the individual tax. We'll cover about the foreign source income, housing loan relief, and most hoo-ha in the market now, they discuss more about the 2% dividend tax, medical expenses which cover your personal and your parents' medical expenses relief, and last we'll cover about health and elderly care. So I just want to know who is here to know more about how are you going to save tax for yourself and for the company. Yes, what is the purpose for you to join this seminar? Is it to save more tax for yourself or your company? If you agree with me, please press 3888 in the chat box. Yes. You want to learn more in order to have more ideas on how to save the tax? Yes, very good. Hi, Miss Chiu. Oh, Tony also 888. Sharon also 888. Okay. Miss Woon also 888. Okay, so let's start for the foreign source income for the individuals only. Okay, this is only applicable for the individuals. And a lot of clients, what are the foreign source income? It could be like you have the listed company shares in overseas and you want to remit the money back to Malaysia. So normally the client will ask, hey, Cindy, you are entitled for any tax or not? So the government says the foreign source income bring back to Malaysia until 2026 previously, okay, is tax exempted. That means you are not required to pay any tax. But up to 2026, the good news is the income tax, they extend another 10 years again. That means you can buy your time to bring your foreign source income back to Malaysia. Yes, what are the foreign source income? Like my client asked me, hey, Cindy, I have one properties in Australia. I dispose of my properties and I have a lot of money, about $1 million in Australia. If I would bring the money back to Malaysia, will I subject to any tax or not? So what do you think? The answer here is not subject to any tax until 2036. Okay, so, but I just want to reiterate that you need, even though it's not taxable, you need to keep the proof, the supporting documents. So what are the supporting documents? It could be if you sold the shares for the foreign company shares, then you may keep the disposal of the agreement that you sell the shares. If you have the foreign dividend income, then you have to keep the dividend voucher or the bank-in slip. Okay, so you have sell the listed company shares in foreign country, then you have to keep the shares, yes, as a proof. So these are some of the documents that you're required to keep it. So next one, housing loan interest relief. Okay, this is very good for the first time residential home loan. What do you mean the first residential home loan? That means you never owned any house before. Even though, let's say I'm Cindy, let's say I personally do not buy any house, but my parents inherited one house to me. Will I subject eligible to claim for this loan interest relief or not? The answer here is no. Even though parents' inheritance to you is considered, you are not considered for your first residential house. So you cannot enjoy this relief. You must be the first time. Okay? First time, that is meaning to say, can I buy under husband and wife? Yes, you can. So, but can I claim now? No. How you say? They say, remember, they say the S&P is, when is it? S&P is from 1st January 2025 until 31st December 2027. So if your children, okay, any of your children or your niece, they plan to buy the house, ask them what? To hold first. Why? Wait for another 1.5 months, then they can enjoy this relief. What are the relief? That means if you buy the house less than 500,000, you can claim a tax relief up to 7 years for 3 years. Isn't it good? Because if you're the first time home buyer and the house is less than 500,000, you can get the stamp duty exemption also, up to maximum of 9,000. How about I have more budgets. I want to buy a 500,000 house. Very difficult to get even a condominium in Bukit Jalil. So you want to up your budget a bit, can or not? Yes, can. So if your S&P price is 500,000 to 750,000, you can get 5,000 interest relief every year for 3 years. Okay, so 3 consecutive years. So how it counts? That means it must be commenced for the first year that you service of your term loan. How about husband and wife? What do you think? Husband and wife join in to buy the first house. Can my husband claim 7,000 and my wife claim 7,000 also? What do you think? What's the answer? IRB said you need to prorate into the percentage. Yeah, so if you own 50% and your husband owns 50%, so your husband can claim 3,500 and yourself, you can claim 3,500. Okay, so this is because the government encourage, the youngest, they buy their first home. Okay, this is the medical expenses relief for yourself, but I wish, okay, I hope we do not claim this relief. Why? This is all the serious illness, not the headache, not the stomach pain, not the minor injury you can claim. No, this is a serious illness. What are the serious illness? For example, like Parkinson's, cancer, your leukemia and heart attacks also. You can claim for yourself, your spouse, and your children. You may claim for the first year, second year, or maybe third year, you can't claim anymore. Why? As I said, serious disease, you may be, we are maybe not here anymore, so we can't even can claim. But bear in mind, even though we have so many categories here, so this whole group, we add up together, maximum we can claim up to 10,000 only. Yes, that means serious illness for yourself and spouse, currently 10,000, proposed is 10,000. For fertility treatment, for your wife, for the IVF treatment, you may claim, so keep the receipt. Vaccine for your children, for your spouse, you can make a claim. Dental also, dental is the normal basic dental examination, not for the dental beautician, that means the whitening of your teeth. That treatment, you can't make any claims. Okay, but under the budget 2025, what are the changes? Actually, income tax, they have expanded of their scope. Now influenza tax kit. You go to the pharmacy to buy the tax kit, please keep the receipt. It can be claimed in year 2025. You buy the self-testing medical devices. Yes. For example, what are the medical devices? Oximeter that you buy for yourself. Blood glucose meter, also you can keep a claim. Under 2024 and before, that means not applicable, mean here you can't make any claim. But in year 2025, we can make a claim on these expenses when you purchase oximeter and blood glucose. Blood glucose maybe less than 100, between 100 and 100, slightly more than 100. Oximeter, you can buy 30 to 50 ringgit. But even though it's more, you still can make a claim. Now, the disease detection and examination in the clinic and hospital in the clinic, also you can claim for the disease detection, like influenza detection, hepatitis A also, you can make a claim. But in total, you can claim up to 10,000. If you have the children with the learning difficulties, currently you can claim 4,000, but this 4,000 has been increased to 6,000. Okay, so this is the summary of the medical expenses. The total relief given still the same, but it's just that IRB give you more scope, more expanded scope, then you can make the claims. Next one, sports activities. How many of you, go to the sport? Can I have 111? You join sports, any sports? Yes, anytime, any one of you? Yeah. Go sports even though once a day, twice a day, 3 times a week. No one. All workaholic. Can you put check box if you go to the sport 111? Wow. If you didn't go to sport, yes, gym. Gym also consider. Swimming. Swimming is sports as well. Badminton. Yes. So, Bharati. Bharati go to sport. Yeah. Very good. Gym is sport also. So now you can keep the receipt plan now. Yes, this one has been a separate relief because previously this one is under the lifestyle relief. You can claim maximum 2005. But IRB now you can split it in standalone. It's a standalone sport activity relief. You can claim up to 1,000. And the good news is you can claim for who? For yourself, for your wife, for your children. And the expanded scope is even though your parents, wow, your parents go to gym, go to swimming, go for exercise, you can make a claim. But all in together is 1,000 maximum. How much is the gym member fees now? I think easily 2,000 plus per year. Yeah, but maximum you can claim 1,000. How about what kind of the sports of equipment? Be careful, sports and equipment. You Google search this Sports Development Act 1997. We have total about 103 types of the sports you can claim. So what are the sports that you can claim? For example, the sports you can claim are aquatics. Aquatics is the swimming. Yes, judo, badminton, basketball, bowling also is considered sports. Next time you have a family, time, you go for the bowling, you can claim. Cycling, boxing, archery, football, netball, gymnastics, judo you can claim. Yes, so go and check this list, Sports Development Act. Like myself, I do send my children for the swimming class and for the badminton class. So can I claim or not? Yeah, my 2 boys I sent for the badminton. Who loves to play badmintons? Yeah, for the coach. But be careful. They say the training provider, you must be registered also. Yeah, you may be registered with the entities must be registered with the Commissioner of Sports. Yeah, or with the SSM to run a company. Then only you're allowed to claim for the training fees. Competition also, badminton competition, the organizer, you have to check who is the organizer, must be approved and licensed by the Commissioner of Sports. Yeah, all this you can make a claim. So in future, keep the receipt. You play badminton, I'm not sure how much is per hour now. It could be 16 ringgit per hour. Yeah, you can make a claims as well. Okay, so move on. This is for the parents, medical care. All these are related to your personal tax relief. From now, you can plan for next year, 2025, personal tax relief because keep the receipt. Plan for your personal tax now. Okay? Parents, medical care. Parents now, the good news is they include the parents and your grandparents medical care. Also, you can make a claim, but maximum how much you can claim? It's only 8,000. So now I believe some of you may go to the nursery home very often to receipt of your grandparents. Why the receipt of your grandparents? To take photo with them. Yeah, to prove that the relationship, they are my grandparents. Because normally for the parents and the children, we prove with the birth cert. But I don't think the grandparents and your parents, they have the birth cert, especially your grandparents. So now, how to prove they are your grandparents? So we're still pending for the IRB, for the guidelines. How to prove it? Yeah. So what are the medical care expenses we can claim under this category? First thing, medical treatment at the normal clinics and the hospital, you can claim. please keep the receipt. Please keep the receipt. But people will ask me TCM. For the Chinese, for the Malay, for the Indian, can we claim or not? They can claim provided they have registered with the Ministry of the what? The medication. Yes, they can make a claims. What else? The treatment that sometimes we send the parents, because due to the busy work, we send them to the home care nursing home. Daycare like the child care now. We have the daycare also for our parents. Yes, and all these expenses we can make a claim. Yeah, dental treatment and full medical checkup include the vaccine. But of course, this only limit to claim for 1,000 only. So keep all the receipt. If you have the what? So you may ask me, I have 4 siblings. How to claim? It depends because it will based on claim by receipt. Who make the payment? Correct? Who have the receipt? Then discuss. If this is a share cost, so you have to discuss and negotiate within your siblings who make the claims, or you can ask the hospital or clinic to split the bills in order to equally claim by, say you have 4 siblings, 4 brothers and sisters. 4 also they wanted to claim because it's a share cost. So no choice. How? You ask the hospital or clinics to split the bill if they can do so. Okay. Next. Any questions? So welcome to key in the chat box. So we have our team. Our full team is preparing to support for the support today. So yeah, the childcare relief. Childcare relief, if you have the children less than 6 years old, yeah, you will send for the childcare or kindergarten. All right. Okay. So relief, you can claim 3,000 only per household. Irregardless how many children you have. You may say, hey, Cindy, I have 2 kids. Can I claim 3,000? And my husband claim 3,000. Yeah, I claim for 1 kid and my husband claim for 2nd kids. The question is, no. Cannot. They say, why? It's 3,000 only per household, per family. Then you have to make the decision who make the claim. That means who has the higher income, of course, they should claim this 3,000. But you cannot simply claim. Then you have to check the background of your kindergarten. Means you have to check, ask the principal, hey, hi, Mr. Principal, may I know whether this kindergarten has been registered with what? Domestic social welfare or not? Or registered with the Ministry of Education. If they didn't register with these 2 authorities, I would say sorry. The childcare relief is not tax deductible. They must register with these 2. Okay? And then this relief has been extended from another 3 years, from year 2025 until 2027. Even though the amount is small, but it's better than none. Okay? If you can claim 3,000 and your personal tax rate is 24%, how much tax you can save? It's 270 ringgit. Yeah, 270 ringgit, about 60 ringgit per month. Okay. These child care allowances, tax exemption of child care allowances is different from your child care relief just now, 3,000. This is another allowances. Say for example, next year when come to year 2025, Bharati, maybe you say, hey, my boss is very good. So we are proposed we have the additional childcare allowances to all the staff. 250 ringgit per month. So if 250 ringgit per month times 12 months equals to 3,000, correct? Per year, 3,000 per year. So the next question is, this 3,000 is exempted on the recipient. That means when the staff receive these childcare allowances of 3,000, the individual staff is tax exempted. There are no need to pay tax. But how about the company? The company, the government says what? You see, the employer here, will get 6,000 tax deduction. That means you will get further 100% deduction. That means if I paid my staff is 3,000, but I can get how much? Wow, 6,000 relief. Do you think it's good? Yeah, Miss Leo, you may propose this, for the next year increment. 6,000, company can claim 6,000. Is the company tax rate is 24%. Tax saving is 1,440. And the personal tax is exempted at all, So these are the benefit for employee and employer. So for the HR, you can start to do some planning, for your staff, the overall package. And the good news is now it's not just remit to your child care, They want you to take care of your parents and even though your grandparents also. So they has expanded the scope to the elderly care, which is your parents and your grandparents. Annual D. Okay. Annual relief. This is the private retirement scheme. Who can join this? According to the World Bank, about 25% Malaysian workforce is self-employed. What do you mean? Self-employed means is you are the sole proprietor and partnership. So you contribute because we do not contribute the EPF anymore. Okay, so once you contribute the PRS, you can claim the tax relief up to this 3,000. So as long as you're above, then you may ask me, hey, how old can I claim for this, start to contribute this ERF? The first one is, as long as you're above 80 years old, not 80, 18, sorry, 18 years old, you can claim. This one not for your spouse, not for your children, you must be for your own, then you can claim. The third one is you have to go and approve by the SSM, SC Security Commission, only you can claim. So what are the authority approved by the SC? For example, like Public Mutual, and Invest as well. So you have to contribute the PRS with them. This is like the investment scheme. At the same time, you enjoy the tax relief. Next one, education and medical. Do you agree that every year we have claim to max or not? If you agree, please put 111 for me. Medical and educational insurance. Nowadays, the insurance has increased a lot. Correct or not? Yes. Government allow us to claim up to a maximum of how much? 4,000 only. And this one inclusive of yourself, your wife, and your children, medical and educational relief. Okay. So how to claim this? Sharon Wong said yes. Parati, yes. Yes, increased a lot for the medical insurance relief every year. Yes, so we have to buy as early as young as possible. And this one is follow the who are the insured person. Only the insured person who can claim the relief. Is not the one who make the payment. They only always follow the insurance policy, insurance premium policy. Who are the insured person? Only you can claim. So the increase from 3,000 to 4,000, okay, effectively is from year 2025. SSPM, yes. Who has made use of this SSPM? If you contribute this SSPM, can you just have a quick survey? You put yes. Yes. Let me know whether you are enjoying this scheme or not. How many of you, yes, know about this SSPM? Have you contributed to the SSPM or not? Anyone? If you're contributing, then can you put in yes? Nothing. Not anyone. Wow. Okay. So I should share with you more on this SSPM. It's in Malay we call Scheme Simpanan Pendidikan Nasional. And my husband and I, every year, we will contribute this SSPM. Why? Later I will show you how high is their return. Okay, so this SSPM, you can claim relief up to 8,000. Actually, it has been entered, but it has been extended up to another 3 years, up to 2027. How to claim? That means how to claim. There are bad news and good news. The good news is this SSPM has already been what? Been extended until year 2027. The bad news is it can claim either by one parent only. That means you can either claim by the wife or the husband only, regardless of the number of the children. That means, what do you mean? Up to year 2024, that means husband also can claim, the wife also can claim. So now you still have 1.5 months to enjoy this benefit. So for those who haven't banked in or deposited into this SSPM relief, so quickly go and make a deposit within this 1.5 months. Okay. So where can I contribute this? So you can online go to My PT PTN apps, or you can go to their website, or you can go to the very traditional method is you go to their branch, authorized branch. You can check where is their branch is and bank. You can open the account in the bank. For example, here is considered the net movement. That means it's your, just now I mentioned SSPA is on your net payment. That means the net deposit money. For year 2024, let's say I bank in 8,000 in SSPM accounts. How much can I claim? Maximum, I can claim 8,000. Yeah? But looks at year 2023, I bank in 10,000, but how much can I claim? Maximum, I can claim 8,000 only. Why? IRB say no, maximum 8,000 only. That means no use. You bank in so much of money. Okay? Since I have normally my husband and I we will bank in 8,000 only to enjoy the full claims. Okay, in year 2024, I put in 8,000, but I minus what? I withdraw 16,000. I have a net withdrawal of 8,000. So can I make any claim or not in year 2024? No. Why no? Because I do not have the net savings, net deposited money in year 2024. Yeah, so I cannot make any claim in year 2024. And year 2025, I put in 24,000. How much money I can claim? Still the same, 8,000. So this year, so please put in this into your SSPM account. So how much the tax savings? Okay, let's show this tax savings. SSPM net savings is, let's say I put in as my investment 8,000 in SSPM account tomorrow. And your personal tax is 25%. How much tax savings you can save? Number one, I can save 2,000 on my personal tax. Do you agree? Yes, depends on your tax rate. If your tax rate is 30%, you can save 2,004. Okay, but bear in mind, SSPM, they give you the interest also. Let's say the interest could be 4%, yeah, 3 to 5%. So my example here is 5%. So second return is the SSPM dividend. So in total, you will get 2,004. How much is your in return? 30%, Yeah, how am I going to get this 30%? Is 2,004 over 8,000. It's 24%. Sorry. It's 30%, return. Yeah, can you tell me where can you find such a good investment in the market? 30% return on your SSPM. So, you agree or not? Yeah, do you want to invest in this SSPM 8,000? Yeah, so you may click onto this link and register and have more search on this SSPM. Yeah. It's the husband and wife, you can save about 4,008 per year. for both of you. But this is the last year, 2024 is the last year for you to enjoy the SSPN together. When come for 2025, either one only. You see here? Either one only. So the rules will change. Okay? So let's move on. Anyone driving the EV car? Yeah, my colleagues driving the EV car. So they have to buy the EV charging facilities. I think cost about 1,800 to 2,000 plus. Yes. So IIB said the charging relief, the machine, you can claim a relief up to 2,005. Okay. And then who love planting here? Organic planting. They say household food waste composting machine. That means all your food waste, you just need to put inside this mini composter. Then they will turn into the organic fertilizer for you to reuse it in your planting. Okay, so you can claim relief also for this composting machine, but they allow you to claim once in every 3 years. So the EV car plus the composting machine, you can claim maximum 2,005 per year. And this relief is up to 2027. Yeah. So you have to plan. If the wife, they say, I want to buy EV car next year. Husband, I want to buy composting machine also. So you have to discuss husband and wife, which one should you buy first? Buy the car first or composting machine first? If you buy these two together in same year, in next year, too bad, because you can claim maximum of 2,005 only. Okay. Now we are talking about 2% dividend tax. This is a hoo-ha topic. Yeah, on the individual shareholders, especially the accountants, yeah, the financial controller, the accounts executive. Then you have to what? You have to be alert on this, the updates on this 2% dividend tax. Bear in mind, this 2% dividend tax is only applicable for the individuals. Whether you are resident or you're foreigner, it could be non-tax resident. Yeah, only on individuals. Second thing is, even though how about nominees? Some companies, they do have the nominees. Even though the nominees, when they receive the dividend, is subject to 2% dividend tax also. And this dividend is what? Distributed by the company in Malaysia only. Okay. How much is the threshold? It's 100,000 threshold. What does it mean on 100,000 threshold? Meaning to say, if I receive dividend in year 2025, and the dividend that I receive is 180,000. How much is the tax I have to pay? 180,000 minus 100,000. So the chargeable dividend income is 80,000. How much is the tax rate? Dividend 2%. So how much the tax you need to pay? 1,600 only. So this is the simple calculation of the 2% dividend tax. From which year? 2025. That means this dividend will be taxed on the personal tax. That means any dividend received before what? Before 31st of December 2024 is not subject to any dividend tax. So what should you do as an accountant? Please go back and check all your companies. How much is the retained earnings in the companies? How much is the retained earning? Whether should you declare the dividend? Yes. If yes, the answer is yes, then you have to go for the solvency test. So if you pass the solvency test, the next question is how much dividend you should declare. You have to think, if you declare all the dividend, whether the company cash flow can cope or not. If the company cash flow cannot cope, then the shareholders have to pump in the money back to the companies. So frank the dividend not just for the sake to save the tax only. You have to think for many aspects. Like just now, Adrian mentioned that sometimes certain companies, because they have the bank loan, if they want to declare the dividend, they have to what? Notify the bank first. Yeah, they cannot frank the dividend above a certain limit. Yeah, so these are the concerns. So let's look at what are the assumptions on this dividend. First thing, if you receive the dividend income from abroad, from overseas, it is not subject to dividend of 2%. If you are the pioneer company, okay, or your company enjoying the IA, so you're also not subject to 2% dividend tax. And some of the assumptions here, you can look into it one by one. So how about EPF? Kumpulan Wang Simpanan Pekerja. EPF also exempted. That means when we receive the dividend from EPF department, IIB say, no, yes, no need to pay dividend tax. Amanah Saham Nasional and Unit Trust. Unit Trust include of the rates. Okay, if you receive rates from dividend from the rates, also not subject to dividend tax of 2%. Let's move on. Any questions you can put in the chat box? Yeah, many clients, they have many questions on this part. So a simple thing, two scenarios. Scenario number one is, this individual, they is a retiree. They do not have any income. They just have the dividend income. So how much the dividend will be taxed? This will based on the calculation that I show you just now. This one, very clear. Okay. That means how much dividend that you receive minus the exempted tax threshold times 2%. Very straightforward. But scenario number two is, wow, this Mr. Brian, they have dividend income and other income. Then I have to use the formula. What is the formula? A times B, A over B times C, in order to get my dividend chargeable income. So let's look at it. This is the scenario number one. Very straightforward. Mr. Brian, okay, received 500,000 in year 2025. How much is the dividend tax? 500,000 minus 100,000 assumption minus your relief, okay? Then tax with your 2% dividend. So you have to pay 7,008. How about second scenario? This Mr. Brian, they have the salary income, employment income 400,000. At the same time, they had net rental income 60,000 and with the dividend income of 250,000. The total income is 710,000. So can you help me to calculate how much the dividend tax need to pay by Brian or not? Okay, I cannot straight away take the 250,000 minus 100,000 times 2%. I cannot do so. Why? Because I have to follow this calculation. A over B times C equals to D. So let's look at this calculation. Okay, this Brian, you can declare the dividend now, but you only make the payment in year 2025. So he received the payment on January 2025. That's why you need to bring it to tax for year 2025 tax. And second batch of dividend, he received in June 2025, 180,000. So this 70 plus 180,000 in total is 250,000. He need to pay dividend tax. Why? Why he need to pay dividend tax? Because he received in year 2025. Okay? So it's based on the payment received date. First thing, you have to calculate the statutory dividend income. Remember, this 250,000 minus 100,000 tax exempted. So you will be taxed on the statutory dividend income of 150,000 only. Yeah, okay. So the calculation number two, after you get this statutory dividend income, so we use this formula, A over B times C. A Okay, what is A? A is your statutory dividend, 150,000 over your total dividend, total income, 610,000 times your chargeable income. What is your chargeable income? Your chargeable income is your total income minus all your relief. Then you derive at the chargeable income. Then you get 146,000. It's my dividend chargeable income. So you look at here. So how much the tax I need to pay? If you receive 250,000 dividend, you need to pay 2009 tax, dividend tax. Effective tax rate is about 1.2%, not exactly 2%. It will be lesser. Why? Because the first 100,000 dividend is not taxable. Okay? So plus some calculation of this formula. So you just need to pay 2009. So we have the 2024 is what? Closing towards the end of the year. We have about, today is on 8, so we have about less than 2 months to plan what are the personal tax relief that we can maximize on. So this is the summary for you to refer to. No worries. Yeah, because we have prepared an infographic on your personal tax relief for year 2024. So you have subscribed of our today or last week talk, so we will send you the infographic for free. So you can print it out or you can save it in your phone. So easier for you to record too. Okay, so I'm not going to explain one by one. So I just want to show you we have prepared this for you. Yeah. Lifestyle plus the sport equipment. Yeah. So next, personal tax. So sometimes the customer may ask me, hey Cindy, I want to ask you, I want to start my business. So do you think that I should start using the register of sole proprietor, partnership, or Sendirian Berhad to run my business? So I will ask you, what is your business nature? Yeah, is your business is very high risk or low risk? Yes. And then how many partners you have? Yes. What are the financial resources that you plan? That means the finance resources, you may use your personal savings. You may try to get the bank loans. Yeah. If you're trying to get the bank loans, if you're running your sole proprietor and partnerships, it's very difficult to get a bank loan. Yeah. So I will advise you, you may start for a Sendirian Berhad. And then the size, the estimated revenue that you're going to generate in the short term and the long term. Yes. Are you more to the B2B business or B2C business? Who are your clientele? So I will not just look at one angle for the tax consideration because I'm the tax agent. So I will look for the tax perspective and advise you. No, we have to be integrated with other aspects also. So we will sit down with you and discuss with you what is the best entity which is most suitable for your business. But here are the summary for the tax angle. This is just for the tax angle. If you're running if you have a chargeable income, that means, what do you mean of chargeable income? Is your profit plus or minus of the tax adjustment, then you will derive at the chargeable income. How much chargeable income you should be taxed? If you import a Sendirian Berhad, your tax rate will be from 15% to 24%. Yes. So the tax you have to pay, if you have $1 million profit, you have to pay 195,000. Effective tax rate is 19.5%. That means you have 100 ringgit, you have to pay 19.5 to the LHTN, 19.5%. For example, you're running this business in sole proprietor. The same profit, you have to pay tax about 248,000. Effective tax rate is a bit high, about 25%. Okay, how about partnership? That means I invite another partner. I have partner, myself and the partner. Let's say 50%, 50% each. Then you have to pay tax of 220,000. the effective tax rate is 22%. So from the tax perspective, of course, you should incorporate a Sdn Bhd. Okay, but what are the pros and the cons for a Sdn Bhd? Okay, for a business, if you run it under the Sdn Bhd and if you run it under the sole proprietor. Yeah. Connie asked, how's the tax rate for LLP? LLP is follow the Sdn Bhd tax rate. Yes. Okay. Yeah, thanks, Anchi. That means a Sdn Bhd, what is the advantages? Of course, it's the limited liabilities. That means the risk is up to the what? Your payout share capital only. If your creditors or suppliers sue you, they cannot make you personally be bankrupt. Because whatever you put in as a payout share capital, let's say your payout share capital is 100,000. Maximum that you can lose is 100,000 only. This is the risk protection. Okay, and Sdn Bhd is a separate legal entity between the shareholders as well. Okay, it had been perpetual succession. That means a Sdn Bhd cannot be died. Only the shareholders will be passed away. You will have the change of the shareholders. So the Sdn Bhd still exists until you strike it or you wind it down, you're winding off. Okay, and of course, this is more creditability and trust. Why? Because this company has already been audited by the auditors. That's why bank will prefer to loan the money to the Sdn Bhd instead of sole proprietor and partnership. Okay, but of course, the disadvantages is a higher compliances cost. You need to get secretary, tax agent, and the auditors in. But you see just now, how much the tax you can save. You can save about easily 50,000 per year. So if I tell you your compliances cost is only 10,000 per year, will you proceed to the Sdn Bhd? Yes, I can save the money, I can save my tax, and I can have a what? Limited liabilities. Okay, so this is the pros and cons for the Sdn Bhd. For the sole proprietor, it's easier to monitor, easier to do the accounts, is less flexible and lower cost. Why lower cost? I no need to engage the secretary, my auditors to prepare my auditor reports. Yeah, so I can tax on individual skill rate, which is from 0% to 30%. Yeah, okay. So these are the comparison between the Sdn Bhd and sole proprietor. So when you ask us, actually, we do not have the fixed answer for you. We have to tailor-make the answer for you. By after the session that we come sit down and we have the discussion with you, then we have a better position to advise you further. Okay, let's have a coffee break of 10 minutes. So can we come back at 3:35? Yes. Then we continue with the company tax and other government loans and incentive. Okay, I see you about 3:35. Any questions, then you can put it in the chat box. Thank you. Hi, welcome back. So let's continue for the corporate tax. You know, the key tax changes for the businesses. The first one is e-invoice implementation. May I know who are in the phase one? Can you put one? Yes, any companies in phase one has already started their e-invoice implementation. If you are in phase one, can you put in the chat box one? And if you are in phase two, then you just let us know. You are phase two, you put in chat box two. Okay, Neil said they are phase two, okay? Okay, Bharati in phase one, that means you have already started this e-invoice. How about the rest? If you're under the phase three, also do let us know. Phase three, then you just put a 3. Yes, how about others? Oh, Miss Hall, phase two. Okay, it's coming soon. Call, yeah, Lee said phase 3. Miss Hall left with about less than 2 months. Yeah, coming soon. Salim, phase 3. Yes, you still have about half a year, about 7 months for the phase 3. Okay, so whether you are ready or not for the e-invoice, actually, there are no U-turn. They do not have the U-turn for the e-invoice. And now the government, they do not have any incentive or any subsidize in form of cash by the government, but this is a small incentive or the tax savings that provided by the government. What it says, they say the qualifying expenditure, that means your capital allowances. Your capital allowances, because when we implement the e-invoice, of course, we may need to upgrade of our ICT equipment, like you purchase your hardware or you upgrade of your computer software package, or you buy the extra server, any consultation fees, licensing, or incidental fees to customize of your computer software development. IIB said all this, you can make a claim of the capital allowances. Let's say at this moment, currently, let's say you make a claim of 100,000. Yes, 100,000. Let's see, sorry. $100,000, and the first year you can claim for 40%. 40% means 40,000, and the annual allowances you can claim for 20%. So you still have the balance of 40,000. Second year you can claim 20,000. Third year you can claim 20,000. Okay, this is second year and third year. They say you can finish claiming all the capital allowances within 3 years. But IRB now, they say it will be shortened to claim for the capital allowances. So how it shortens? You incur 100,000. They allow you to claim, first year you can finish claiming the IA 20,000, annual allowances 40,000. So you're left with 40,000. So IIB said the second year you can finish to claim the balance of 40,000. You can claim all. That means I say the CA will be shortened from 3 years to 2 years. You can claim it faster. Okay. So next one. This is for the tax incentive for hiring the woman returning to the work. What are the tax incentives? The first criteria is this woman must have a career break of at least 2 years. 2 years and return and join your companies. You may consider to start to engage this kind of the staff. They stop working because they want to take care of their family, take care of their children. So they stop working for at least 2 years, then you get them in as one of your managers or senior managers or one of the executive. So what is the benefit for the companies? The benefit for the companies is, let's say you pay to the staff, the new workers, you pay to her 10,000 per month. So 1 year is 120,000. So the IRB says you can claim extra, how much? 50% extra on her salary. That means we incurred 120,000, but the company you can claim 60,000 more, you know, because 50% of 120,000. Then how much is your tax savings? Additional tax savings is 60,000 times 24%. So your additional tax saving is 14,400. Of course, this one you have to apply to the Talent Corp. You have to apply your application to the Talent Corps, only you can claim. Another criteria is the tax incentive for employers, that you're providing caregiving leave benefits. That means this employer is very good. Your staff on leave, but you still on leave in order to what? To take care of their children or ill for the disabled family members. But you're on leave, but you still pay your staff the salary. That means they're on leave, pay leave, you know, that means you pay the staff salary. Yes. So the government says the same. You can enjoy the 50% further deduction given to the employer up to 12 months. Same calculation as per just now, but application must be submitted to the Talent Corporation, Malaysia Berhad, from 1st January 2025 to 31st December 2027, about 3 years. Okay, these are the website for the Talent Corps. So you can log into it and make a survey how to make a claim and what are the terms and conditions to enjoy these two benefits. The next one is the carbon tax. Have you heard about carbon tax? Okay, if you are in the iron and steel industry or the energy industry, you may be affected. The government has been announced the carbon tax will be kickstart in year 2026, but government didn't announce how much to kickstart. How much is the carbon tax going to charge when we kickstart to charge this carbon tax in year 2026? So we have to wait until the guideline for the government. But let's look at our neighboring country, which is Singapore. Okay, in the carbon tax, Sweden is the first country to implement the carbon tax. And this carbon tax actually already implemented in Singapore back to year 2019. And when they started the Singapore, they only imposed $5 per ton only. But now, back in year 2019, that time, but now back to year 2024, it has been increased to $15 per ton. Okay, according to the statistics, the government, Singapore government, they have the intention by year 2030, this carbon tax will be increased to $80. Yes. As per Malaysia, because we aim to be by 2030, our Malaysia is zero emission for the carbon. Yeah, this CO2. That's why Malaysia, our country, start to impose this carbon tax by year 2026. But these are a big background of what is happening on the carbon tax in other countries. Okay, let's move on to these EPF measurements. Okay, EPF measurements for who? For the foreign workers. Do you think this one will be impact of your companies if you are in the manufacturing? Yeah, if you are in the construction industry, I think a lot of the workers will be in the foreigner. Am I right? That's why the government, they're trying to, it's a mandatory, it's a must, mandatory to provide this EPF to all the foreign workers, But how much to impose? Will it be same rate with our local? We are not sure yet. IIB haven't announced yet. But this is the news, the methods, the highlights, and announced during the budget 2025. So look at the current practice. We have the contribution rate for the employees who are not Malaysian citizens. Yes, but we need to contribute how much? 5 ringgit only. 5 ringgit only from the employer. Okay, and 11% from the employee. Okay, 5 ringgit only. So just now is the EPF. Second issue is the increase in the minimum wages. Minimum wages has been increased again. Okay, since the smallest from $900, then slowly increase throughout the years, and next year is 1,007 minimum wages. So if you have the minimum wages, effectively is from 1st February 2025. However, if you are running a small business with less than 5 employees, so you still have some leeway. That means you can postpone your implementation until when? Until 1st August 2025. Okay, so the guideline will be provided to all the industry, to all the employment sectors. So let's look at the impact as I mentioned just now. Do you think this one, minimum wages and EPF, will have the impact to your industry or not, or to your companies? What do you think? Yes or no? If you think yes, please key in the chat box. Yeah, for the minimum wages. Yes or no? And for the mandatory contribution for the EPF, for the foreign workers, and minimum wages increase from 1,005 to 1,007. Just now, I think last 2 weeks, I went to give talk. Bharati said yes. Okay, if you are in the construction, if you are in the F&B, and if you are in the manufacturing companies. Okay, so I went to the one of the trading company, it's an MSC company. When I discussed about this one, I asked them, do you have any impact or not? So the directors told me, Cindy, no impact. I asked why. They say no foreign workers in my companies. Yeah, so to them, maybe will not have any impact, but it's just that, you see, the foreign minimum wages is from 900 increased to 1,007. It's almost double throughout the 10 years time. 10 years here, you can see the statistics, 10 years. And this is the starting salary as highlighted in budget 2025. Okay, the new fresh grad, they're getting 2,003 if they are in the industrial and production technician. If you compare the fresh grad local, they get 2,003, and the minimum wages for the foreign worker 1,007. Do you think they will feel balanced or not? Hey, they say foreign workers they get 1,007, and I'm fresh grad and study the degree. So hardworking after 4 years, my starting pay only 2,003. So they may have the temptation to what? To request higher starting salary. Am I right? Yes, so this may have the effect, for the full cycle chain. So let's look at for the effect. How much is your impact? This is the scenario. Okay, Baju, they are selling the Baju. Baju manufacturing Sdn Bhd, they have 100 workers. This example just have 100 workers. If you're a manufacturing company, how many workers do you have? Foreign workers. Easily a few hundred foreign workers. Am I right? Yes. And they have 5 production lines. Before that, the minimum wages is 1,005 times 100. Their pay is only 150,000. But after that, the implementation of the minimum wages, this is per month. So after implementation of the EPF and the foreign work wages for the workers, but now the EPF, because we are not sure how much is the rate to impose, so we'll follow the old rates, 5 ringgit per workers, plus the new imposition of the minimum wages. So you see the cost has been increased from 150,000 to how much? To 170,000 per month. So the cost increased about 20,000 per month times 12 months. So indirectly, you have just for the salary only this portion, your cost increased by 246,000 per year, equivalent to 14% of your of the cost. Do you agree? This is very high. How about let's say your margin is very low, You have the low margin. Manufacturing, you may have less than 10%, but only this particular cost increased by 14% after the implementation of the minimum wages. So what do you think? Will it affect of your industry or not? So now you have to plan for the next year budget. Sit down with your boss, take out the calculation and paint a picture to your boss. Calculate how many are locals and how many are the what? How many of your employees will be affected? Have to raise up their salary to 1,007? Or is there any solutions on this or not? Okay, discuss with your boss. Next one. Anyone heard about this family office? Forest City Special Financial Zone. Anyone heard about this? Or anyone have not heard about this? Give me an indication. No. Family office. Have you heard about this family office? No. Mr. Salim say no. How about others? Tony, have you heard about this? Bharati? Yeah, Miss Wong? Oh, Tony say yes. Oh, Leo say no. Yeah. Bharati say no. Okay. Okay. Tony, if you heard about family office, it could be your boss is a rich man or yourself is a rich man. And family office, which is related to the high net worth individuals. It's a planning to the high net worth individuals. Sorry, this is the family office. So what are the criteria? Actually, family office is a family office. This is a office. That means they need to set up a company and then let the professional to run it. Who are these professional? This professional could be the lawyers, could be the tax agent, could be the certified financial planners to run their all their investment. That means they will transfer their assets, which is loan free. Okay, transfer the asset into this company. We call this as a family office, and let this group of the specialists to run it for them. So with a fees charged on annual basis. So what is the benefit for this family office? If you're located in the Forest City in Johor, Forest City is in Johor. So this Forest City is located where? It's located in Pulau Wan, Pulau Satu. Yeah, in Pulau Wan, Forest City. So the second thing is, here, you must include a new investment companies, okay? And your AUM is asset under management, must be at least 30 million. Actually, 30 million is considered cheap. That means the asset that you hold by this family office cannot be less than 30 million. What do you mean? Because in Singapore, it's 100 million RM. It's equivalent to about 1/3, of the requirement in, if you want to set up a family office in Singapore, at least 100 million, which is about 1/3 if you want to set up family office in Malaysia. Okay, and in this family office, you must engage 2 staff, minimum 2 staff, and with the specialist, the professional is about 10,000 per month professional. That means you pay to them to manage this family office. So you may ask me, what are the incentives? How do I pursue my boss to set up the family office in this Forest City? Of course, the first thing is the zero corporate tax rate. Yeah, that means this is the investment holding companies, and you receive the rental income of 2 million per year under this asset. This category of asset include factories, or industrial, or land, or shop units. Then you have the rental income. So the profit generated by this family office, so is 0% corporate tax rate under the family office, but this is under the single family scheme. What do you mean of single family scheme? Okay, they have multi-family scheme and single family scheme. Single family scheme meaning to say this professional firm only manage your family only. That means they only manage your family. That means one family only. Okay. And other types could be they at the same time they manage a few family office for their rich people, not just your family office. They have many, but this incentive is 0% if you are run under the single family scheme. Okay, but if you are the expert and you work in the forest city, so you are entitled for the tax rate to be taxed at 15% flat only tax rate, which is very attractive also for the knowledge worker. The return knowledge worker, that means they study overseas, they are Malaysian, or they study overseas, and then after they study in overseas, they work in overseas. But now, the government, they encourage the specialists or the knowledge worker to back to our home country and service our home country. That's why we have this scheme. If you work in the forest city, also your tax rate will be at the flat rate of 15%. And then that means the tax rate is 0 to 5% if you're on the global business services. Okay, so if you want to know more about the family office, you can contact us. Yeah, we can arrange the consultant to meet up with you on what is the steps and procedures and how are you, your boss, okay, or yourself, how to benefit from the family office. So what are the impact? Because why the government, they want to encourage this family office? In Singapore, we have about 1,007 family office in Singapore have been registered in Singapore. Yeah. So what is the impact? Our Prime Minister encouraged this because, of course, it will increase the capital inflow, the money coming in Malaysia to set up the family office. Second is to investment and for the economic growth. So these are the purpose why the government, they want to encourage the family office. Okay, the next question you may ask me, where is it, Cindy? Where is the family office? So here, okay, Forest City. You look at the map, you Google search, then you can look for the Forest City. So why we call at Pulau 1? They plan to have 4 Pulau, but now they have opened up this Pulau 1. Pulau 1, Pulau 1. So where is the Pulau 1? Pulau 1 is here. Yeah, 1, 2, 3, 4. Yeah, 1, 2, 3, 4. This is 1, 2, 3, 4. So this is the Pulau 1. So now they just open this Pulau 1. So is Pulau 1 to this Pulau 1 to Singapore is only 2 km only. 2 km. Yes, and they have the shuttle bus for you to send you from the Johor to Singapore and from Singapore back to Johor. If you take the shuttle bus from Johor to Singapore, I think it will cost you about 4 ringgit RM. And you take the shuttle bus from Singapore back to the Forest City, they will charge you Sing dollar for 4 Sing dollar per trip. So it's very convenient. Okay, they have the shuttle bus here, and then they have the international school here. But okay, in Pulau 1, the Google search for this Carinian Towers. So the family office must be located here. You cannot simply choose other places. Must be located here in Pulau 1 at the Carinian Towers. Only you're entitled to claim for the tax incentive. Okay, so this is some of the very quick intro about the family office. So let's move on. For the property gain tax, RPGT, and the stamp duties. And again, it doesn't have a lot of changes on the RPGT and stamp duty, but we just want to highlight, okay, and share with you some of the tips on how it can benefit you for the RPGT and stamp duty. Okay, for the company, if you dispose the property within first year, you're entitled for 30%. Yeah, so the rate will be going down, but do remember, if you park your company, the properties in your companies, even though in the 6 years you dispose, you will still entitled for 10% tax. What is the tax? It's 10% on the gain of the disposal of the properties. How about loss? You may ask me, hey Cindy, I sell my properties and loss. So what do you mean? At loss means you no need to pay the RPGT tax. Okay. Let's say for the individuals here, individuals is referred to the PR or MC. Okay. MC, that means after you dispose the property in the 6 years, you pay nothing. The tax rate is 0. But how about your individual is a non-resident and you are the foreigner? You still need to pay 10% tax. Okay, this is the tax rate for the RPGT. Let's move on. For example, okay, here, calculation of the RPGT. Alicia and Adam, both of them are married, husband and wife. They bought a condominium in Mont Kiara. When they bought this condominium, they bought in the 1st January 2018. For how much? 1 million. They purchase price 1 million. Oh, after married, okay, less than 3 years. Less than 3 years. That means from 1st January 2018 to 30th June, only 2.5 years. Wow, very fast. They want to upgrade of their house already. They upgrade their house. They decided they want to sell their condo. Okay, because they want to upgrade. So they sold at 1.3 million. How much is your profited gain on the disposal? Purchased at 1 million, they sold at 1.3 million. How much is their profit? Can you help me? 1.3, you sold at and you buy at 1 million. So you profited how much? 300,000. Am I right? Yes. So 300,000, Adam and Alicia each profited 150,000. Okay, we can minus the deduction. What are the deduction? It could be your stamp duty purchase during the time that you purchased. It could be the legal fees. It could be the agency fees. It could be the repair maintenance. You minus the deduction. Okay, but if you pass to the lawyer to handle, I think you have to let the lawyer know how much is the deduction. Yeah, if you incurred renovation, you have to let the lawyer know. Okay, minus the exemption. Exemption is everyone once in a lifetime. Yeah, for your own stay, the residential home you entitled for. Okay, but not in a one time. This is every time when you dispose, you can entitle for 10,000 or 10% of the gain of disposal, whichever is higher. In this scenario, this is 10% of 150,000. So you're able to minus 15,000. So the net chargeable gain is 105,000 times tax rate 30%. Why 30%? Because you dispose within 3 years. So the tax rate is 30%. How much Adam and Alicia need to pay RPGT? They need to pay 31,500 times 2. So they need to pay 63,000. A lot of money, right? So if you are the tax agent, or if you are the accountant, or if you are the FC, finance controller, what will you do? What will you advise to your boss, or to your friends, or to your family, or even to yourself? So look at here. Any tax planning on RPGT or not? You ask me, I will say yes. Why? I said defer. Can you hold on first? Hold on for another 6 months. 6 months. You defer to year 2021. Hold on 1 more year because the tax rate will drop from 30% to 20% tax rate. You have the tax savings of 10%. Okay, so you save 21,000. Okay, second thing is avoid joint name. Why? Once in a lifetime that I mentioned just now, either one of you, we can enjoy one-time exemption on the RPGT. But your joint name, that means you sell one properties, but it's joint name under husband and wife name. That means both of you has already what? Enjoy this exemption already, but under you can enjoy one properties only. So I will advise you, okay, don't try anything need to be fair and equally. Anything also want to join in with the husband, or because you must put my name. Why? To show that you love me. Am I right? Is it correct? No, if you put the joint name, first thing is you waste this opportunity. In fact, if I put separate name, husband can enjoy one property and wife can enjoy the other properties. If you put joint name, both of you only can enjoy lifetime exemption for one properties only. Another thing is for your commitment, the credit ratings. Yeah, doesn't mean that if you get the bank loan of 1 million, joint name, husband and wife, and get the bank loan of 1 million. So the bank doesn't look at it like 1 million divided by half. So you have the bank loan record of 500,000 for the husband and 500,000 for the wife. No, the bank doesn't look at it like this. So the bank will assume ending each of you, the wife have 1 million housing loan. The husband have 1 million housing loan. Why? It's a joint liabilities. So it will eat up of your commitment and make you and your husband is a bit difficult to get the bank loan. So this is the planning. If you know more about this, then you can plan ahead. Okay. The third thing is you have to know how to claim on the allowable expenses. So keep all the receipt and keep all the supporting documents. Yeah. The stamp duties, the agent fees when you make payment to the agency, the legal fees during your purchase time and your disposal time. Expansion, that means you renovate of your properties, you entitled for the claim. Keep all the receipt, yeah. But I will advise you to get your tax agent to do the filing for the RBGT. Yeah, so do not want to, because want to save the cost of the tax, preparation of the RBGT to get the tax consultant. But at the end, because you get of the tax consultant, they may help you to have more tax savings on the RBGT. Okay, so can call us. And what are the RBGT exemptions here? Of course, some of the gain on disposal is not taxable, is exempted. For example, your husband transfer to you with a profit is considered is love and affection. It's not taxable. It is only applicable for the citizen. How about your wife is a foreigner? You want to transfer the property to your wife. I will say sorry. Why? Because it's only applicable to the citizen. Another one is a gift between the parents, the child and grandpa. That means it's a gift the parents want to inherit this to the children, or the grandpa want to give the properties to the grandchildren. Also, it's a RBGT exemption. Okay, these are the scenarios. They have a lot, but these are the few scenarios that we often do use it. Okay, now is the stamp duty. We have the income tax self-assessment. That means we fill in the income tax form our own and we make the payment. IRB will not check us, but they will come and audit us every 7 years to check whether the amount that we declare is correct or not, is accurate or not. Yeah, the stamp duty also, they will have the self-assessment. That means as per current status is, when we want to pay stamp duty, we have to lodge to the income tax first. Then we have to wait for few days. Wait for the income tax officer to tell us how much is my stamp duty. Then only I can make the payment. Yeah, this is the current system. How about during the self-assessment system? That means we have to assess the stamp duty on our own. So income tax, they will receive in FAID on whatever amount that we make the payment to them. We tell them they will accept in full FAID. Okay, so they have 3 phases. The phase 1 is start from 1st January 2026. It will start from the rental and lease agreement first, the stamping of your tenancy agreement of the property. Then you have to go for the first phase. The phase 2 start from 1st January 2027 on all the instrument, the S&P on the transfer of the property ownership. How about the phase 3? The last phase will be from 1st January 2028 because this is more difficult to measure. The value is instruments or all the agreements other than in phase 1 and phase 2. it will be fall within the phase 3, which is on 1st January 2025. But I think this one you may not worry too much. Normally, the stamp duty payment will handle by who? Stamp duty payment will handle by the lawyer. But in future, the normal tenancy agreement handled by yourself, yes, you may log it under your personal name, under the My Invoice portal. Okay. These are the stamp duty rate. It's starting from 1% for the first 100,000, the 2% for the subsequent 400,000, and the 500,000 to $1 million above, the stamp duty rate is 3%. Anything above $1 million, you have to pay 4%. But the foreigner, they have to pay flat rate of 4%. I would say sorry. They have to pay 4% flat, okay, on the value. How about the loan, stamp duty? Okay, stamp duty loan agreement, you have to pay a flat of 0.5% on the loan amount. For example, Adam bought a condominium on 1st January 2025 at 800,000. Just give you an idea only how much the stamp duty that Adam need to pay. If he bought a 800,000 properties, he need to pay 18,000 based on this calculation. Okay, so the next is on the stamp duty exemption. Yeah, stamp duty exemption. First time buyer, less than 500,000, you can get 100% waive. This one I have explained just now. Yeah. And if the second thing is, if you transfer the property from the executor, that means from the deceased person, they inherit this property to their children. Okay, transfer via will, Farid Distribution Act. This is for the Muslim Act. So the stamp duty to pay is 10 ringgit only per installment. Yeah, it's under the stamp duty exemption. Let's look at for this tax planning. You may ask, or your boss will ask, my client will ask, Cindy, should I transfer the property to my son now? Or through the will, or after I pass away, only I transfer the property to my son? What do you think? What do you think? In future, if your boss asks you this question, you can advise your boss. See, boss, you come. Okay, let's say, okay, this is Awong. Awong. He wanted to transfer his property to his children, Anthony. Okay, in November 2024, this month, 2024. But this Awong bought his property in January 2000 at 600,000 only. But now this property value, market value is 2 million. 2 million. So profited how much? 2 million minus 600,000, profited 1.4, correct? Need to pay RPGT or not? No need to pay RPGT. It's a real property gain tax free exempted. But stamp duty need to pay or not? Your answer is, it depends. It depends. Why? If you transfer this property before, during your lifetime, oh, I'm sorry, you have to pay stamp duty of 64,000 based on the value of 2 million. Okay, but in the other way, you say, I want you to take care of me. I don't want to stay in the nursery home or old folks home. Okay, I will transfer this property to you after I pass away. That means you transfer this property through the will. See, the stamp duty you pay is how much? 10 ringgit only. How much you save? You save 63,990 ringgit. So this is one of the planning. When is the good timing for you to transfer the property, whether during the lifetime or via the deal? It makes a difference. This property is just 2 million only. How about 20 million worth of properties? Okay, so this is the planning. Indirect taxes and others. Okay, we have the sales tax imposed. Going to impose, haven't imposed yet. Remember, 1st May 2025, but my colleagues told me that Cindy, I went to buy the avocado. Once our PM announced today, the next day I went to buy avocado. They have increased the price already. Yeah, but bear in mind, avocado, salmon, this is the examples only. Actually, the list is more than that. In future, like cherry, overseas, the export fruits, cherry, it could be under this category. Yeah, start from 1st May 2025. Okay. And the services, the scope of the service tax, they will be imposed. That means there will be expansion. But what are the extra additional scope to be imposed under the Service Tax Act? We do not know. We don't know yet. We need to wait for the government updates. But the same, it will be implemented on 1st May 2025. Next one, this is the service tax updates. For the logistic, a bit hoo-ha of the logistic, start from 1st March. So from 0%, you have to increase to 6% on your logistic. Carlo, okay also? Yeah, it's from 0% to 8%. Financial services also increased to 8% from 1st March 2024. These are the expansion of the service tax, additional services. How about others? Oh, this is the updates on the service tax. On the repair and maintenance. Repair and maintenance, last time, my client always call us, Cindy, can you explain? Because they are provide the repair and maintenance for the equipment. Yes. Equipment, it can be for the machines because they're selling the machines. At the same time, they provide the repair and maintenance. It could be on the routine basis. Routine basis, maybe they have signed a contract with the customer on monthly basis, quarterly basis, or yearly basis to come and maintain the equipment. If this is on routine basis, we call this as a preventive routine basis. All this while is required to charge the service tax, but 6% only. Start from 1st March, from 6% is increased to 8%. Okay. Another scenario is SOS. What do you mean SOS? It's super urgent. My photocopy machine is not in function and I need to rush for my auditor report. How? Immediately I have to call what? I have to call the machine guy to come and repair it. Yeah, so that one is corrective. Last time, before 1st March 2024, not subject to SST. But now, from 1st March 2024, is subject to SST of 8%. Okay? So next one is the grant. We have many grants here. Okay, we have listed down 15 types of the grant you can see. So you can zoom it and read it one by one to see which grant is more suitable to your companies. Then you can try and log on to apply on it. These are the grant. And we are not going to explain it all one by one, but we have listed down the top 6 Malaysia SME government grants. It includes the CRADA CIP ENIC grant. Okay, this is for the tech-based and digital grants. For more, you can visit this website, Digital Transformation Accelerator Program. Yeah, you have to apply to the MyTab. Once you log in, all the grants guideline, terms and conditions are listed down in the guideline. Okay, Smart Automation Grant, you apply to the MIDA. SME Digitalization Grant, this is that we use to apply. If you buy, later I have the example, I will explain more to you. This grant you have to apply through the BSN. Industrial 4.0, the grant, apply to MITA, and the Sandbox grant, this is for the enable the research done, innovation, startup, high-tech entrepreneurships to apply, to test their product, to test their service, and R&D also. Okay, these are the 6 famous grants. Step to apply the grant. Of course, identify which grant is suitable for your company. Whether your company is eligible or not to apply the grant. What is the grant? Government grant, it could be the free money or it could be the matching grant. Matching grant means government say if you spend 100,000, I subsidize 50,000 and you have to bear on your own 50,000. This is 50-50 matching grant. Okay, some of the grant is 100% in full. They sponsor or subsidize you. Then you have to submit with your business plan, prepare all the documents and submit the application and follow up. So of course you have to write the documents required. These are the generic documents required when you apply to the grant. So included of your business profile, company profile also. So if you are keen and interested to know more about this government grant, so feel free to call us or contact us on this part. Okay, so these are the digital grants. Digital grant, you can get the free money from the government up to 5,000. So if you apply the digital marketing, you're buying the payroll software, accounting or tax software, Internet of Things, or point of sales, you can apply this grant up to 5,000. 5,000. What is the criteria? First thing, must have 60% Malaysian owned. Must be in the company in operation more than 6 months. Annual turnover must be at least 50,000. You do not apply this grant before, then you are eligible. It's pretty easy to apply. But again, this is up to whether the grant is available or not. Because this round, the allocation of this grant is only 50 million. It's not a lot. So very fast, you'll be grabbed by all the SMEs. Okay, this is the market development grant. We will help you to have do the advertisement or set up any booth, whether it's local or overseas. This is on the lifetime limit, up to 300,000. Yes, who can apply? SME, professional service provider. Even though you are the sole proprietor, SP stands for sole proprietor and partnership, you can apply. How to apply? Criteria is listed here. So please read accordingly. Okay. Loans. Just now we talked about the government grants. So now it's the government loans. There are many, many loans. What are the interest rate for a company to obtain for their company business working capital loans? I would say easily the interest rate is from 7% to 8%. Or do you have any ideas, others, as a business owner, accountant, what is the interest rate charged by the bank in order to get the working capital loans? Any ideas? Can help me? Is it ranging this one, 7% to 8%? Or more than that? Okay, this have the many, many loans. Yeah, you can see the loans here. But for example, this is one of the loan. SME bank loan. This Hanis just graduated. Okay, so just start their business. They decided to apply this loan, SME Business Accelerator Program. And this loan is 1 million. They're able to get the flat interest rate up to 7 years potential. That means the financing amount can be 50,000 to 1 million, quite a lot. Okay, you can pay back maximum up to 7 years, but your annual sales must be at least 300,000. How much is the interest rate? Interest rate is just 4% per annum only. Cheap, it's very cheap. Some more is on a flat rate. So these are the requirements here. So you may advise your clients, or you can even advise your boss to look into this loan. Of course, this is just one of the example. There are many loans. Okay. So e-invoice impact and the updates. Okay, we have the 6 months of the e-invoice relaxation. So what does it mean? So should I continue or not? Yes. The question is here. Okay, this is the 6 months. If you are in the phase 1, you can enjoy the relaxation for another 6 months. The latest is up to 31st January 2025. Second phase, you can extend it up to 30th June. And the last phase, you can extend it up to 31st December 2025. What does it mean? That means you may choose to utilize this 6 months relaxation period, or you may choose not to utilize. Okay, during these 6 months, you have the right just to issue no need to issue individual e-invoice. That means you can opt to issue the consolidated e-invoice as month end and submit to income tax once a month only during this 6 month relaxation period. It is same goes to the self-bill e-invoice. That means you can add up all the self-bill e-invoice. You have the options not to issue the individual self-bill e-invoice. You can consolidate all the self-bill e-invoice and submit to IRB. Okay, as the month end, 7 days after the month end to the IRB. So these are the relaxation period updates. You can choose. But from our experience, most of our clients, they choose not to use this 6 month relaxation. They want to go ahead from this date, the original date. Okay, because they don't want to suffer for another six months again. Okay, the good news to the MSME. MSME, they have the new guidelines, okay, which is have announced in October, 1st of October, regarding the MSME, the new FAQ. Then you can refer to it. But here, I will not explain more on the changes of the MSME on the e-invoice guideline, because we will have the e-invoice update on next Friday. E-invoice update 2.5 hour sessions. Then we'll explain more in details in next Friday seminar. Okay, so you can download the My Invoice apps in your handphone already. Yes, yeah, this is the new My Invoice HubSaleNet, and we have few seminars. E-invoice seminar that I explained to you. When is the day? Is on 15th of November. Yes, in the morning session. And at the same time, we have Form E and EA updates. This is very suitable for the HR, meaning to say, it's not just how to prepare of your Form E, how to prepare from your EA. So we'll cover for the personal tax planning. That means you want to know more about this. What are the tax allowances exemption for the staff? Okay, how to calculate the PCB audit? What is the latest updates going to implement soon in next year, the ePCB Plus, what you're going to do and what you need to do now. Yeah, if not your boss asks you what is regarding the ePCB Plus, you cannot say do no. So you have to learn all these techniques and the latest guidelines regarding on the HR part. So this is the pay cost. So the fees is $699, and this is HRDF claimable. But if you register with us today, fill in the link so you can enjoy the promo price of $500 only. Yeah, it's a full day course in English. And what are the date? The date is on 25th of November. Okay. So this is I think no more, the budget. Today is the last session of our budget. Actually, we have 4 budget talks. Last Friday, we have 2, and today we have 2 budget talk. It's free. And moving forward, next Friday, we have another budget talk. It's e-invoice updates. It's in Mandarin. English, if the demand is hot, you can text me and ask me, then we can run another time for the English session. Okay, but because due to the very hot demand from the Mandarin, so we open for the Mandarin session first. Mandarin is from 9:30 to 12:30. It's free. So scan this QR code and register now. Okay, it will cost $499, but now we give it free because it's quite a numbers of the updates on the e-invoice. Yeah, on the MSME, on the 6 month relaxation period, on the format, on the latest of the FAQ also. Okay. Next one, this is the unlocking HR tax strategies. As a HR managers, as an accountant, I think you cannot miss this training. Okay, this training is on 25th of November 2024 from 9:30 to 5. Is HRDF claimable? Is online platform. Okay, it's on Monday. You want to register now? Today only cost you about 500 ringgit only. So you just scan this one and register with us. So we will be in contact to you. So any questions or not? Yeah, let me saw chat box. Any questions? Anyone have any question? Can key in your chat box. Yeah, you can use the promo code. We have the promo code AYKL EPCB 199. This is our promo code. Then you can get 199 discount on this top. Okay, for the e-invoice update, you can click this link. Register direct with us. It's free. It's on next Friday. Definitely, you will get a lot of latest information from this e-invoice update seminar. Yeah, normally we are charging 499 for 2.5 hours, but now it's free for today's audience only. Wow, no question. Any more questions? Yeah. If no questions, so I would like to say thank you to all. So I would like you to like our Adrian Yeo Tax KL Facebook and Instagram, because we have a lot of updates. Yeah, we will share the full list, the list of the government grants in next week. So you will be able, and with all the grants, then we have listed down all the related link in order to guide you to read further on the government grants. And then the so updates also increase from 5,000 to 6,000. So all this information, by liking our Facebook, you will get more information on time, on real time. So do share if you feel this seminar is good for you and for your colleagues. Then do share our next seminar, which is on Friday, to your friends, to your colleagues, and even though to your boss. All right. So I would like to say thank you for your time and thank you for your supporting. Thank you. See you next time. So I should end the seminar now. Thanks, Marathi. Thanks, Miss Wong. Bye bye. Thank you all. Yeah. Thanks, Miss Liu. Thank you. Thank you. Wow, no question. Okay, thanks, Cora. Bye, Tony.